Hi, I'm Jared Nelson from the Investing Channel, and welcome to The Spill. Exxon Mobil used to be the largest company in the world by market capitalization. Then fracking became a thing. And then renewable energy became a thing. Pretty soon, Exxon, like many other oil companies, found itself with lower margins and a murky outlook. Yet, the transition to clean energy isn't happening overnight. And the pandemic created a mismatch in supply and demand that took oil prices to their highest levels in over a decade. And believe it or not, we expect them to remain elevated for the foreseeable future. As the top integrated oil and gas stock search amongst financial pros last month, we know many big money managers wondered the same thing. Since 2019, the company's upstream portfolio hasn't generated much production growth, and that isn't expected to change. However, they boast some of the most prolific assets, which gives them a leg up for when they plan to use them. Compared to other companies, Exxon is extremely disciplined in its capital spending. Unlike many of its peers, Exxon believes renewables alone won't be enough to meet energy demand in the coming decades. In fact, they're betting people will need more oil in the coming years, as standards of living improve. It's hard to discuss Exxon without immediately diving into its financials. And while 2021 was a difficult year for the company, things have begun to look up in 2022. Specifically, all operations now operate at a profit. If we extended their current operations out into the future, the company would generate profits that match some of its best years in the last decade. It's important to note that although revenues aren't what they once were, operating and free cash flow are still doing extremely well. And we also want to point out the consistency and level of the company's dividend, which pays a stunning 5.11%. Moving to valuations, we felt that the best way to examine it was to compare it to the top searches from our data. Starting with profitability, British Petroleum and Petrobras came in cheaper than Exxon, Chevron, and Suncor. However, Exxon boasts a better price to sales, with the exception of BP, and the same with enterprise value to sales. And while the price to cash flow isn't as cheap as BP, Suncor's at 8.26 times it isn't too shabby. It's worth noting that Petrobras' stock price is depressed due to political uncertainty. And while Petrobras takes the top spot for margins, Suncor comes in a close second, followed by Chevron. Exxon's margins aren't too bad, but still not as good as its peers. In our opinion, this is a 6 out of 10 ranked stock. While we like the stability and discipline of Exxon, shares simply trade at too high a multiple. And stacked up against its peers, we prefer Chevron or Petrobras as a riskier play. It might sound like a big ask, but we'd prefer Exxon closer to $50 per share. Click and subscribe to the Spill newsletter to get the full breakdown.